Hey guys, what's up? So in this video we're going to be going over NIO. It's going to be a similar analysis to what I did for Tesla for the base case. Not as in-depth because I'm not as confident with NIO because I haven't done as much research and I haven't been into the company for as long as Tesla. But this is going to be a good overview, just going over the base case in terms of their deliveries, in terms of their revenue, in terms of their market share, and everything like that. So firstly, this is no financial advice. You have to do all your research yourself and do not follow what's in this video. As all the videos on YouTube, this is for entertainment purposes. And while I have done my research and I'll be, putting my money based on my research, you should do the same with you. So let's get started. First, we're going to go into the assumptions for this case. So the first assumption will be that the delivery increase will remain constant. So what this means is based on what they've done so far and how they've been able to ramp up so far. This is how I'm assuming they're going to ramp up in the future. I'm also assuming that no significant product will be delivered, meaning no mass market car, because that can really accelerate this delivery. And as far as we know so far, there's not going to be any huge deliveries of any mass market car. Even their current cars, which they're going down in price and trying to basically go from the premium to from the luxury to the premium market, even that is still a high selling price, so we don't expect any big volumes from there. And then lastly, we assume that the average sales price of cars will remain similar, which in reality is not true. The average sales price will drop, but based on what you believe the company will do, if you believe that they'll release a mass market car soon, not a problem. The revenue should remain the same, because then you just you decrease the number of money they make per car, but you're assuming that the car is increased. So the revenue will remain the same if you believe that they're going to release cheaper cars within the next 3 years. Let's get started. So this is the current state of NIO. So as you can see, so far their ramp up has been very linear. They haven't, been able to exit this bubble of what they have. With the average ratio I got was around 1.4% year-over-year increase. So or the difference when you do the ratios between quarters. So the only big one was a 30 ratio between Q2 2018 and Q3 2018. But besides that, it's not looking too good, and you can see their quarter over quarter, it's not really getting much better. The only quarter we can point out this year that we're happy with is Q2. Biggest delivery increase so far, 6,500. Q3 was disappointment, and I believe Q4 will be a disappointment as well in terms of comparing quarter over quarter. I'm predicting 15,800 cars delivered, and that's an only 3,600 car increase. We've had larger increases, or similar ones at least, in Q4 2019. So personally, I am not super happy with their ramp up, and I really hope they they increase their ramp up production and their delivery rates, because right now it's too linear, and it'll take too long for them to get market share, which we'll see later in the video. Again, just to reiterate, this is the base case scenario, so don't go over me for whatever numbers I put here. All of the green numbers, of course, are from NIO. That's the current numbers that have been confirmed. And basically, I took the ratios and just kept on adding those up, which the ratio was 1.4 for you that are interested. So, for example, Q1 2021 is Q1 2019 times 1.4. Again, that 1.4 is the average of all the ratios for their existing quarters. So as you can see, I predict for 2023 they're going to deliver over 100,000 cars, 115,000 to be exact. I still think the majority will be comprised of luxury sedans, I think, or luxury cars, whatever, SUVs. They're big products in China. I believe these will start being shipped to Europe, so I believe that they'll still be able to sell those because they're premium cars and there's premium people everywhere. But I still believe seasonality will affect them just as it has so far. So far they've been losing basically deliveries on each Q1. It's normal in the car industry, but for them specifically because it's a very luxury brand so far. And I believe that will continue going. As I said, in this assumption, we're not assuming any new cars that can balance this out. So I'm assuming that they're going to keep selling their luxury cars, but Q1 will keep on dropping. Good, so now when we look at car deliveries, as you can see, the year-over-year increase is staying the same as I said. One important thing to note is that you can see it's a linear growth, which we'll go over soon. That's not good. We really need by the end of this, basically 2022, to have the S-curve, to start ramping up. So they really need within the next 2-3 years a mass market car to be not only all proposed or whatever, it needs to start being delivered, and they need to start getting market for that. And once they've got market for that, they need to really start ramping up their production and deliveries, because otherwise it's going to be very linear. And unfortunately, I do not believe the stock will grow much further from this point, as you'll see later in the video, if it continues like this. So when we look at it cumulatively, basically, so how many cars in total they have delivered so far, we can see it's starting that S-curve. It's definitely starting that S-curve, especially towards the end of 2023. But it's not quite there, and again, in my opinion, they really need to ramp up, because otherwise this S-curve will be too slow. They're not going to gain enough market share for how much the shareholders really want. If we look at quarter-over-quarter changes, so comparing each quarter to the previous one and how many more or less cars they've delivered, we can see that how much more. I'm predicting kind of the same, again, ratio increase, and I'm predicting that Q1 will basically kill them every single year. I believe that they're going to have inventory from Q1, and they'll sell it for the rest of the year, basically. Not all of it, of course, but you get my point. I'm really not looking forward to these Q1s of these years if they keep selling these premium products. So now we're going to go into the car revenue. So what do I predict? For 2023, I predict around a 6.6 billion car revenue total for the year, with Q4 2023 being 2.5 billion of that. Again, quite linear increases, and I've assumed the average selling price of 57,000, which is the average price of all their quarters so far, actually. It's probably a bit on the high end. They've already delivered their premium versions and stuff, but yeah, just for this base case scenario, we're assuming these prices, which in my opinion is good. I think that this increase is acceptable. It's a linear increase, but for people that are buying shares now for $50, I think you need to look out for this. Unless you have a bull case, which we'll go over in some other video, but unless you believe in your own bull case and you're strongly confident in it, based on a base case assumption, this is not looking too good, and you'll see why when we do some comparison between the revenue and the stock price. So when we look at the revenue quarter over quarter, same as the deliveries in Q1, they're gonna keep under delivering or whatever, depends on what you expect, I guess. One thing to note is probably in real life it won't be like this. NIO's kind of a brand itself, so they can sell other things besides just cars. So from that point of view, they might be able to kind of bring these together between the quarters. But I still expect the seasonality to affect them, even though not as much as in this base case scenario. So if we look at car revenue quarter over quarter, it's quite a decent linear growth. It's not bad, and as you can see, the gradient from 2022 starts going up a bit, so we're approaching that S-curve in terms of revenue. But again, for shareholders that are expecting a 150-200 share price, I'm not sure this is going to be enough to justify it, and I'm not sure it's going to be enough to push it up there, actually. But let's continue. So this is the graph, which I think is super interesting. This is the growth rate of their revenue and the growth rate of their stock. So you can basically see until now, yeah, I mean, if you zoom in on these periods, maybe there's big differences, but overall there isn't. The biggest difference is now, since Q3 2020, basically. So because it's been so overbought and, the share price is now 50, the share price basically went up 162% or 142, whichever period you want to look at, while the revenue only increased by the average 30% in Q3 and Q4. So what is happening is basically that the next 4 quarters basically have, if not more, but let's say the next 4 quarters, so the next 1 year of revenue has kind of already been assumed in this share price. So if this base case ends up being true, what I'm saying is that it's pretty much going to stay at 50 until the end of next year, at the end of 2021. Because, yeah, right now the share price outgrew the revenue by too large of a margin for it to be able to be justified based on the current metrics, basically. Now let's look at NIO and the overall global fleet. So their cumulative deliveries, so this is the NIO fleet, and then we have the world BEVs, which is based on my own research. Please do your own research if you don't trust these numbers, especially if you're investing. I use the same numbers for the Tesla, so for my Tesla video, and so I'm going to keep that constant because I'm going to make a comparison video at some point. Basically, right now they're sitting at a 0.4 BEV share, which, considering the BEV market is small, it's kind of bad, to be honest, guys. Even though, yes, it's a luxury brand, it's very low market share. They really need to accelerate this deliveries and production ramp, because otherwise I'm predicting by 2023 a 2% market capitalization, which or not market capitalization, market share, which it's not great. It's not great. If they keep this 2% for the next 10 years, I guess that's fine. But for 2023, it's not too great, because the market won't be that big. It'll be 18 million cars, BEV cars, battery electric vehicle, and NIO will sell less than 500,000. So basically, I'm really expecting that 2022 latest, they need to start ramping up another cheap product that they can sell for, anywhere 30 to 40,000 range, if not even cheaper, because otherwise they're going to have huge issues. And yes, they do have the brand factor, and yes, they do have the swappable batteries. So that's, of course, you can add that into the play a bit, and you can argue that they can take more market share. But let's not forget, that's just for densely populated areas where you will have services to swap your batteries or whatever. America and Europe will never buy NIO because they have swappable batteries. It just doesn't make sense. I can charge my car in the same amount of time that I can swap my batteries at a supercharger. It just doesn't make sense, right? So from a base case for the company, I'm very happy with this. I think they're growing fine. I think they're having a nice linear growth. If we want to get into gross margins and stuff, that's another story. So if you want, we'll talk about that in a different video. But I'm generally very happy with this base case. However, I don't think people who are invested in the company are so happy, or if this base case becomes true, because it's not growing fast enough to justify the share price. And that's to justify the current share price, guys. So basically, based on this, by 2022, we'll justify the current share price. Assuming the price keeps going up, unless they ramp up this production, I'm sorry to say, it's going to burst the bubble. The bubble is going to burst at some point, because people are just going to realize, hey, this company can't ramp up exponentially how Tesla does it or whatever. So, then basically Tesla's the new Tesla, But I'll do a video for a bull and a bear case as well. Maybe we can get Ahmed from Facebook group. That's going to be great for the bear video. We can do like a live kind of interview. I think you guys would enjoy that. But for the bull case, I think a lot of you will be more happy with this video, but with that video. But you got to see all perspectives, and my base case is this. And if you're not happy with it, then I recommend you do your own research, because I really want to get some feedback and suggestions from people that understand these numbers, and not just throw their money in, hoping that it'll go up. So, but anyways, so the conclusion. So my conclusion is that, as I said, NIO needs a new mass market vehicle to accelerate their growth. They really need something like Tesla's Model 3, like kind of what that did to Tesla. They need a car like that for them. I'm not sure if it's going to be their new car that they're just releasing now. It still feels a bit premium to me. It might be a competitor to Model Y, but it still feels like a Model Y, Model X kind of range. So they really need to get one of those cars, and factories ramping up. Again, the seasonality will continue to affect their flagship products. So that's their current SUVs, their luxury SUVs for China. And while I still believe they're going to sell a lot of them internationally, I think their China sales will kind of go down. And yeah, I don't think their flagship products are enough to keep their growth. Amazing truck. Anyway. Lastly, I think their current ramp does not justify its share price. As I said, I'm happy with the company ramp. I think it's a good ramp. I think it's very comparable to legacy automakers, the way they ramp up, which it's not really a big praise, but you get my point. I think they're doing just fine, but I don't think they're doing just fine to justify their share price, and that's not the company's fault. That's the investor's fault. So if you guys are buying at 50, just so you know, the most logical analysts, retail or institutional, doesn't matter. If you run these numbers, the share price is crazy right now. And this is just a basic analysis. This is not going into any into any gross margins or profits. I personally don't care. I know it's a growth stock, so I'm invested for that. But it's tempting to sell honestly right now because at least for the next year, because I don't believe they can keep up. Regardless, what I'll do with my shares, that's my own business. What you do with your shares should be done based on your research and then your facts that you come to. So this is gonna wrap up the video, guys. If you want to see more videos like this on NIO or Tesla, I'm going to do them, specifically for a bear and bull case for both companies. And then within a month or two, once I finish those videos, we'll do a huge, nice video comparing the two companies and all their base and bull cases and everything like that. So stay tuned for that. Please leave a comment, like, and subscribe if you want to see more videos, because that's how I know people want to see it. I have like 10 subscribers, so if any subscribers that do subscribe, I know that these videos are enjoyed, so therefore I'll keep making them. And yeah, I hope you have a nice day, and I hope you enjoyed the video. See you.